The US economy is doing just fine. The GDP data out yesterday showing that the economy is growing at a 3.5% annualized pace, which is certainly not bad. The UK is also not doing too badly. Yes, growth in China is slowing down, but 7% is still decent. So I think it's important to have that context. Other positive factors when you think about the global picture is undoubtedly the fall in oil price. Consumers almost everywhere in the world will certainly benefit from that. We're already seeing the US getting a nice boost from falling gasoline prices, something similar in SA. And also importantly, dollar strength is in a way good news for Europe and Japan and many other emerging markets, because I think in the case of Europe and Japan, they're certainly not going to mind the fact that their currencies are weakening.
The most important evidence of this is what we see now in dividend inflows from the investments that South African firms have made abroad. With the emergence and the expansion of the middle class on the continent, if that is not disrupted, macroeconomic stability that Axel was referring to, certainly Africa the continent is going to be a big positive factor for the world, but certainly for South Africa.
I think the Africa picture is still very positive in terms of the forecasts. Of course, off a low base, but still. I think that when the next cycle upturn comes, I think Africa as a whole is very well positioned.
I mean, you have growth in Africa this year, 5, increasing to 5.8 next year. And that's despite sort of weaker commodity prices, so it doesn't yet factor in the very recent move that we've seen over the last 2 weeks. And it's a homegrown story where really domestic demand factors are kicking in, and better macroeconomic policy frameworks are helping to get the private sector involved. And it's not just a resource story. If you look at what are the fastest growing economies on the continent, they're not necessarily resource-based, but 10 out of 12 of the fastest growing economies are not resource-based.